First of all, welcome to my panel and also welcome to everybody that joined us. What a wonderful occasion, and it's wonderful to have you all here. Andy commented about the fish in the lake, so we welcome you to our next lakeside chat, but I see they've commissioned somebody there that actually is supposed to catch the fish. So I hope it's less disturbing going forward. I think it's appropriate that I first introduce my panel. And then I think I'll move on to talk a little bit about the topic and how we actually want to explore it. We've only got 40 minutes, so it's a little bit of time if you think about what we actually need to explore here. So I'm also not going to say much about the speakers. I think many of them you actually know, and you can read their resumes on the app. But let me perhaps say one or two words. I'm going to start with you, Arif. Arif Ismail, he's our head of the National Payments System Department at the South African Reserve Bank. I think he had a stint recently in Washington. I'm not sure if the US citizenship thing appealed to you. Perhaps politics had something to do with it. But anyway, we're all very glad he's back. And from the IMF and also appointed in the role, and once again, congratulations with that. It's a recent appointment, and we're very happy, I think, with as an industry. Arif is probably one of the best placed people to talk about this topic because in the PEM program, he acted for a short while, almost in a strategic and product management kind of capacity. He looked at the fast payment system specifically, but I think in his current role, he's, I think, ultimately positioned to talk about the why of faster payment systems. We'll get into the how also a little bit later, Arif. Of course. Then I think let's move to Valeria. Valeria Mbanka, she's from the Bank of Namibia, and she brings this kind of international flavor, I think, to our discussion. But if you look at her CV, her resume, you'll see she's actually a Mati. She studied B engineering and industrial engineering there, and then she also became a Tukkie because she did a master's degree at Tux. And I think her title says a lot because she's Director of Strategy, Projects and Transformation, if I have it all right. And I think that's actually a wonderful position because, I think she's ultimately equipped to talk about not just the strategy, but also the how part, how you actually mobilize this change. And I'm playing on the transformation part in that case. And then the last person, Erna, here on my left-hand side. Erna has been with us from the initial stages of the fast payment system in South Africa, or the new fast payment system, because we had real-time clearing for quite a while already, but she helped us with the target state architecture at that stage. She's a director, and she's also the founder of Cyan. Cyan has done a lot of work with the RTGS, also with FinServ, and I think also in your previous capacity as partner in Deloitte. She had a lot to do with technology solutions for business problems and big problems like payment systems and such. So welcome also, Anna. So I think let's dive straight into it. And I'm going to perhaps just position the topic here. The topic says it's about faster payment system, but it's about accelerating the future. So I think what we want to explore today is how do we get this done faster? And then specifically, you'll also notice in the title, the roadblocks. So what is holding us back? Let's connect with that and let's understand how we can actually get beyond those roadblocks. How can we actually go faster? with a faster payment system. So I think how we're going to explore the theme is we're going to first just connect with what we see in the world and what faster payments seem to be in the world nowadays. And then I think we're going to move very specifically onto the roadblocks and how to actually accelerate the whole implementation of a faster payment system. So with that in mind, I'm going to start with Arif with the first question. Arif said he's feeling very robust today. And I read that as permission to also ask robust questions.
As long as you're willing to equally get moderator robust questions back.
I'll take it. So I think the first question is, we are seeing the trend that central banks are getting involved in these faster payments.
Certainly,
across the board. Globally, you see that. But I think I need you to help this audience connect again to the reasons why the Reserve Bank is seeing this as so important and why they are resuming a new role. So what is it that you want us to remember about why the Reserve Bank is getting involved in? And what is it that we actually want to achieve with this faster payment system?
Yep. Thank you. Thank you, Moritz. So I'm going to be naughty. I promised you that. So I'm going to keep to my word. I saw a question up there that said, who's your Eben? Right? And I was trying to figure out who's Eben, and I figured it out eventually. Eben Etzebeth, who's your Eben? And my Eben is Anthony West. I don't know if he's in the room. If he is in the room, I apologize up front. My Eben is Anthony West. And the reason for that is, he asked me this very question in one of the sessions at the PEM. And my response was a naughty one. And I'm going to start with that response as I promised you. So my question to you, Moritz, is how do you pay?
How do I pay?
Yeah, how do you pay? You don't have to mention the bank, but how do you pay generally?
Generally by card.
By card.
And generally by tapping. I don't carry a wallet and don't carry cash anymore with me.
Right. You don't keep cash with you anymore. All right. And
well, today I have a few bucks just in case.
And my response to Anthony when we were dialoguing and he responded in the same way, I said, my goodness, including myself, it's such a privilege to be able to do that.
Yes.
Okay? And my response is that many South Africans, many South Africans don't have that privilege. Okay?
Yeah.
And I think it's their right to be able to pay fast, simple, affordable, secure. It is absolutely a right. I often describe this, and I mean it with great humility, right? That we have some of the most beautiful payment systems as compared to many others in the world. And I'm preaching to the converted, right? You guys have built it. I often describe it as the top 5, big 5. RTGS, EFT credits, EFT debits, card, faster payments, and so on. But some of these systems have not reached our citizens. Okay? And the question then is, why? How do we get faster payments embedded, advanced, accelerated, as you were describing it? So I scribbled something down, almost in central bank language, and I'm going to play it back, right? Because I was really thinking about this question, and I wanted to be precise. Why are central banks, including the SARB, okay, so fundamentally driven to see faster payments adoption take up in South Africa? I won't be long-winded. Okay, I'll get straight to the core. You wanted something to remember, right? So I say central banks promote faster payments systems because, as my dad would say it, time, quite literally, is money. And in payments, speed translates into economic efficiency. Every delay in moving money is a small tax on productivity. It ties up working capital, slows trade, and adds friction in the economic system. Faster payments releases that liquidity back into the economy, almost instantly, letting households consume, firms invest, and markets settle. That's why we want to do this. My tagline inside the SARB for the governors is, and we heard it this morning in the presentation with Adrian, right? He said, think of our growth rate, it's pretty low. Okay? How do we up the growth rate? And the answer from studies from the BIS, the IMF, the World Bank, and so on, is that digitizing your payments and moving payments fast has macro benefits. We can add, as a community, 0.5% to the GDP by moving from cash to digital. And my closing line would then be that, of course, I think Pradeep's probably in the room as well, we don't speak of a cashless society. We're not going to get there. But we must have choice beyond cash. Okay? More than 65% of our transactions are happening in cash. This is an opportunity. The glass is half full. An absolute final thought then, hopefully that's quite clear. An absolutely final thought would then be, when we look at Brazil as an example, you know, I keep saying this boldly, we want competitive payment systems. You want card, the way that you pay. You want competing faster payment systems. But if you really think quite carefully of where we are in South Africa, whilst PayShap has taken off quite nicely, right, we have not reached the red dot. We have not seen folks use PayShap in their everyday lives. Not yet. It's an opportunity. The reason why this is important, whilst we want competing payment systems, to the points that were made by earlier speakers, okay, we want to manage sovereign risk. We want to be able to say that we have redundancy for retail payment systems. I'll pause there. Time is money.
Thank you, Arif. Can I just ask Red Dot, explain it to those that haven't been part of potentially previous PEM workshops or
of course.
meetings?
So again, I'll make it into a story. I love my stories. So, you know, when you think of the PEM, and you think of the PEM wheel, that's been put together by Mal and the team, it can almost be overwhelming when you think about it. There's a lot of stuff in the PEM wheel. There's 7 key changes. Each of those changes are fundamental, okay? The crafting of the red dot is to make sure, like a red dot, that you stay very focused on your primary mandate that's been given by governors. And the primary mandate is pretty clear. Bring digital payments to all. That is the red dot.
That's the red dot. Thank you for that. I'm moving on to Valeria, also a central banker. Do you hold a similar view than Arif? Or perhaps let me ask you this, from your jurisdiction, from Bank of Namibia's perspective, why a faster payment system? Why is it so important? What's the strategic imperative about a faster payment system?
Yeah. Thank you very much, Moritz. Good morning, everyone, and thank you for PASA for inviting me. I'm very pleased to form part of this very nice panel. So for Bank of Namibia, our journey started around 2021, 2022, where we started doing sort of like broad benchmarking. And to a large extent, what we found is that certain jurisdictions follow regulator-led approaches and some follow sort of like industry-led approaches. From the Namibian perspective, we thought it would be more appropriate for us to take a regulatory-led approach. I think the industry at large in Namibia has done quite a lot to really make our payment system efficient and it's robust. However, the data also shows us that it's currently serving largely the formal market. I think to your point earlier, the likes of you and I, we do see that the remote and rural areas of Namibia still remain excluded. We think that, and we see that the informal actors are also not sufficiently included. So we decided then to take a regulatory-led approach because for the first part, we want to make sure that we are making the investment. I think over the years, given the various regulatory interventions, the industry has invested equally, and we wanted to make sure that as a secondary objective to financial inclusion, we are making sure that through this process we are reducing the fees and charges. Finally, we use cash EFT cards similar to South Africa and cash in Namibia to a large extent. And card and EFT are interoperable, however, e-money remains closed loop. And a big objective of this instant payment solution that we are bringing about will also make e-money interoperable. So it's really with a large focus on the rural, remote areas as well as the informal economy. We see this as a public good, it's a utility, and it's something that we are putting in place to really enhance the digital payment infrastructure for the country, and there's other explorations also around what India terms the digital stack, but to a large extent that is why we felt as a central bank we need to play that catalyst role in this regard. The initiative, while it's a strategic imperative of the bank, also closely aligns to key national strategies. If we look at our Vision 2030, our NDP, even our National Payment Strategy vision that we are currently revising, there's much close alignment to what we want to do at a national level as well.
Thanks for that, Valeria. So I'm going to pursue a different set of questions perhaps with you now, because you were with us right in the beginning, and there was also a modernization rationale behind introducing a new faster payment system. Help us understand what is it that we originally envisaged. Did we envisage what Arif has mentioned and what Valeria is mentioning, and what over and above that needs to be achieved with the kind of technology or architecture that we've established? And also, is it appropriate to serve the purpose? Because I think in the past 3-4 years, most definitely, I think from the SARB, from the point where they got involved, it has also changed. You know, we see that we really need to achieve much more, much faster. But I think the core question is, you know, the technology, the architecture, is it appropriate?
Thank you, Moritz. Good morning, everyone. I think maybe just to mention from a project future point of view, in those early days, around 2018 or so, we were looking at creating with the industry a business concept that actually worked for the future of payments, not only for the faster payments or the real-time payments, but starting with the faster payments and the real-time payments. So in that regard, we delivered an evolutionary architecture for the payments ecosystem platform, which could then be built on in different phases in order to get to the future of payments eventually. So we developed a layered architecture, and in that architecture view, there were core services. So for example, the RPP would be a core service, and there would also have been overlay services, of which we have now as an industry developed some of them. That would include the pay shop and the request to pay and so on. But a lot more can actually be done and developed in that space. And I guess, you know, from an implementation point of view, much progress has been made. Those infrastructures are there. The pay shop is there, even though the take-up isn't what one would have hoped. But there are ways to improve that take-up going into the future.
Staying with you for a moment, and is there anything that needs to be enabled fast? And I think we're getting into the roadblock part of the discussion now, you know, from a technology perspective. Are there any overlay service or issue that you're aware of? And the reason why I'm asking this to Erna is we've asked her to actually do a review of the technology that has been established at Pay Inc. That was about a year ago. So I think we're interested to know what is it that you saw, and is there anything to be concerned about, or are we poised to actually really take this thing forward?
Yeah, so from that architecture overview point of view, there were small findings that we had. We interviewed, you know, the banks and all of the participants to just get their view and opinion. And we also looked at what was implemented at Pay Inc. at the moment. Our findings was that the system overall, which is basically a cloud-based AWS system, is robust. There may be a few tweaks that may be required, but in essence, it does actually fulfill the requirements as we architected from a initial project future point of view, and it can definitely be expanded to incorporate further additional services. But I think one of the most important things for me that was part of the project future originally was to say, not only is it about how do we implement a real-time payment solution for the country, it was also about how do we actually consolidate then, and what roadmap plan do we have to end up with a more consolidated future solution that incorporates the likes of EFT, RTC onto a single platform like the RPP and so on. And so that roadmap plan and that transition was also something that we anticipated as part of the project future.
Thanks. I'm going to go to you now, Arif. We're hearing that technology is not a problem. Is the modernization thrust that we actually had with the technology, is that the reason why we're not seeing what we wanted to see from a red dot perspective? In other words, from the digitization of payments, from making PayShap the everyday choice of every South African. What are the blockages that you actually see? You know, what else needs to be done now to actually accelerate this thing and to actually get to what you mentioned?
Yep. I think let me take a step back. So it's great that we've had a hit squad. The hit squad, I think, has been made up of members from the industry, banks, non-banks, the operators, PASA, and so on. The SAB. So it's been fantastic to see how the hit squad have unpacked where the key issues lie. They've built a wonderful house with some foundational elements that need to be in place. Then, like a house, there's some key, let's call it corridors or pillars that need to be addressed. And then, of course, at the top, you need to be able to test the use cases. And the reason why you need to test those use cases is because it's pretty clear, and I just bumped into John Anderson, and he's going to remind me over many years. Remember, we can do things on the supply side, but there are also demand side issues that we need to think about. I'm just going to park that for a second and just keep focusing on the supply side. Okay? So I won't talk to the whole house. We'll probably be here for longer than the time accommodates, but I'll pick 3 things. And Sean, you're going to appreciate this. Here's my gimmick. Okay? 3 Ps that I think are holding us back. It's not the silver bullets, but it's quite pivotal factors that I think need to be driven. Okay? And Valeria mentioned one. The first P is price. Okay? If the price of the product is not priced right, you will not get uptake. Okay? This is a learning from Brazil, and I'm picking a single case. 0 fee to the payer and a very tiny fee for the merchant. In fact, the tiny fee to the merchant is fixed. It's 28 basis points, the merchant discount fee. 0 interchange, and they're making the model work. My question to the Brazilians were, how did you make the model work? It fiddles my own paradigm that you don't have interchange. Okay? How did you make the model work? And the answer is, you're not making money, okay, on the issuing side or the account holding side or the wallet side, okay, through getting fees, but you get a lot more. You get data, you can extend it to credit, you can even compete on the acquiring side. Okay? And they compete for that market. And we've seen what's happened there. The data is pretty clear. PIPC has taken off. Of course, there's fraud and all the other things. You need to address that. That's the first P. The second P, I don't have to tell the folks in the room humbly. You know the second P and you know it pretty well. Okay? Second P is product parity. If I'm sending you an RTP and I want to send you $5,000 and you've set your limit to 3,000, hello, it ain't going to work. All right? Yeah. And that's what we've seen. Yeah. Okay? 38,000 failed transactions amongst 40 odd. It doesn't make sense. So product parity is important. And you're going to ask me the question, let me answer it. How do we address those things? We need to address it with urgency. And I'm being harsh as I say it. You might disagree with me. That's what I mean by a coordination failure. Okay? When you build a product in the center, the clearing, the settlement, and so on, that's not the only thing that you got to think about. As a community, we know it. I'm preaching to the converted. You got to be thinking across the entire value chain. And I'll just finish off on product and get to the last P. Okay? In Singapore and in Brazil, the central bank, to your point, Valeria, dictates what the design is. at the front end. We've argued that that's green space. They say 3 clicks, that's the minimum thing,
Yeah.
right? And the last P is promotion, okay? We've got to be able to promote the product. I drive around, I look around, how many folks actually know about PayShap, right?
Yeah.
Those are the 3 Ps. I could speak a lot more, but these are some of the blockers. We've got to address them urgently.
Yeah. Arif, I'm going to stay with you for a moment. So in that regard, the Reserve Bank also can do certain things. You know, they can mandate, they can play with interchange or direct interchange differently to how it currently works. You know, I'm even think about the reasons why there's not parity, because, you know, often the banks would say, well, you know, this is we've got a certain risk appetite, and this is just not equivalent to what we prepared to swallow now. And that kind of points very much to enabling elements, you know, like for instance, a fraud directory, a national fraud directory, or things like that, which is also not happening fast enough. Could we see this Reserve Bank actually becoming much more directive in those kinds of things?
Yeah. I think, you know, the short answer is it's always great to be directive, right? It's better in my mind when the participants come together with the structures that we put in place, like the PEM, and say, we recognize this issue, let's address it.
Yeah, yeah.
Why do we need a directive, is the question that I would ask.
Yeah, yeah.
Right? So on the fraud piece, part of the PEM structure is about thinking about centralized fraud capability, and there's also a hit squad for the fraud stuff. And one of the things that they've identified is that we can see it, back to Leo's point this morning on the panel, of authenticated push payment frauds increasing. We can see that, you know, Megan will tell you, we have to share the data. This is a no-brainer. We have to share what's going on. So my take is, a directive is great. If that's what's needed, let's talk. The preference would be, get going with the structures that have been provided. Let's make it happen.
Okay. I'm still going to stay with you. How? How do we get this going faster?
Right. So I'm going to make it extremely practical and not philosophical, right? I think we've come out of the hit squad. We're about to take it through our governance structures in the SARB. We're about to say these are the house of changes that need to happen. We've just heard that the deal is pretty much close to done. We're still waiting for the Eswatini Competition Commission to approve the transaction. The NPU will be established. Between the PEM and the NPU and the industry, we need to get together in a structured manner, but not death by committee-itis. We don't need that anymore. And I think those working groups need to come up with 3 things, which I think the document Cal starts to hint at. Okay, 1, what are the low-hanging fruits? What do we need to do urgently? Let's sort that out. And some things are pretty clear, like parity. We need to get that done. Secondly, there's some things that are in the medium term. Some of that lies, you know, with fraud and sharing data and so on. Let's get that done. And by medium term, I simply mean 6 months, not, right? And then the longer term stuff, things that will take us a bit further, like testing our assumptions through pilot use cases in Tembisa and Garankuwa. That will take a little longer, right? But we need to do this together.
Okay, great.
Does that help? Have I answered?
No, I think that helps us understand, you know, things are going to happen quite fast, quite quick, if I read you correctly. I just want to move to Valeria again. So Arif spoke about the 3 Ps. And surely, you know, you've got similar challenges in terms of adoption, in terms of, and some of them might be behavioral, some of it might be technological. You've made the choice to go with UPI. I don't know to what extent it helped you or not, but what other challenges are you seeing? And I think we're all just kind of curious to understand, you know, the UPI choice that helped you or not, you know, in circumventing some of these challenges.
Yeah. So you're quite right, and I can only add to the 3 Ps. And funny enough, for us, when we started, we took a voluntary-based approach, and we asked our participants who wants to be part of the first cohort. and we received good support from the industry. However, there were some challenges because I think inherently there's a conflict between a policy objective of financial inclusion and profitability. And to be fair, we must not forget that, banks at the end of the day are there to make a profit. So that's something that we needed to balance. And we've tried to address that through governance. We had to form a governance structure that gives a voice not only to the bank as the key investor and the driver of this project, but to make sure that our partners and the participants, even our existing clearinghouse as well as PEN, which is our Payment Association of Namibia, that they are around the table because it requires an ecosystem sort of like collaborative effort. In June, our regulator actually put out a directive that then necessitated everybody to join this journey, and that's where we are now at the technical implementation phase. But I think the key thing that I'm trying to get to is really that collaboration, that engagement. It's key. I think it has limited some of the challenges that we have had on the program. We still have a few, naturally, as a project of that magnitude. One of the key things from a collaboration and engagement perspective, what we've done, although we've procured UPI, we needed to make sure that it's fit for purpose for Namibia. It's not about copying and pasting, but really contextualizing it to our needs and what we need to do for our country. So a key thing was a collaborative co-creation of the functionality of the solution. Of course, from a regulatory perspective, there were some non-negotiables given the policy objectives, but to a large extent, a lot of the functionality was co-created with our industry. So that's one of the key challenges. And what I'm saying really from a commercial side, the business case didn't always make sense for the commercial bank, and we needed to do that. And I think one of the levers that we've needed to pull in that regard is from an adoption or from a cost perspective. I indicated earlier that we are paying for the infrastructure. The cost from a participant perspective will be limited to their integration, but that is still a cost that needs to be incurred from the participant side. But that's what we are trying to do to address some of those challenges in terms of buy-in and support from the ecosystem. I think from a regulatory perspective, we've also needed to update our frameworks to incorporate instant payments and the fees and the price. I think that has been one of the more contentious issues, because from a consumer perspective, the regulator will also be regulating those fees that are applicable to the consumer. Because at the end of the day, if we want to make sure that this product is affordable for the consumers, we can't leave it up. No offense, I know some of my colleagues are in the room, to the industry. We've also seen what has happened with PayShap. I think the price started up here. It's kind of come down significantly now. But I think from a regulator perspective, there was a role for us to play to make sure that the objective is actually met. And then I think more broadly, it has come up in the earlier discussions as well from an infrastructure perspective. We were actually in Brazil some 2 weeks ago, and the contexts are significantly different in some regards, where we are talking about really, really poor digital financial literacy, where we are talking about the cost of data, smartphone penetration, connectivity. They are not worried about those stuff. But for us, it's a reality, and it's a big impediment to what we want to do. So I would say those are some of the challenges. There are others, but I would say those are probably some of the more significant ones that we've needed to sort of work around.
Thanks, Valeria. Before I move to you, and I just want to comment, we've got about 5 minutes left. I don't see any questions coming through from the audience yet. Okay, not on mine, and I have refreshed, so perhaps I can hand this to you, and you can look at that. But while we're waiting for questions, because I do want to...
There we go.
Oh, great, fantastic.
You have 34 lovely questions, but I'm not sure you're going to get through them in 5 minutes.
Sure, I'm overwhelmed by that.
Yeah.
Perhaps just a few closing comments from each of you, and then I think, let's go into the questions. So, and obviously, your view on roadblocks, also, but how do you think the next 2 years or so will play out? What's your view?
So Maurits, unlike many other countries, I believe South Africa is in a unique position now to actually do this payments consolidation, which will save tremendous money across all participants in the industry. And so therefore, for me, one of the biggest things to look at then, notwithstanding the fact that the short-term, pay shop uptake and things like that needs to be addressed, is to actually look at how can one work out a roadmap that will make sure throughout time in phases that, not impacting the payments resilience, that these things are actually starting to be addressed in the interest of everyone, inclusive of the users of the payment system itself.
Thank you. Arif, your view, how would success look for us as South Africans in the next 2 years, perhaps 5 years also from now?
Let's make it 2 years. Let's make it
2 years.
This is urgent. We gotta get this done. So I'll be naughty and place the metric and make it hashtag 200 million per month. Okay, that's the number of transactions we would want to see. At least 3 per capita, right?
Yeah, that's significant. I'm just thinking about the post-box phenomena that we still see.
For sure.
That is a significant.
Which means that
step up.
the ecosystem has to expand to being able to transact digitally for even micro payments, right?
Absolutely.
Right. So where are we now? It sounds like a good news story. I think we sit at about 40 million transactions a month.
Yeah.
Okay, and it's a bravo, wonderful. It's cannibalization of existing. It's electronic to electronic. What we want to see, humbly, is cash to electronic.
Moving into.
Okay, hashtag 200 million. That's the target. Let's go for it.
Thanks for that.
I'm sorry for interrupting. I'm sorry for
Go for
interrupting. One of the things that's going to be quite pivotal in this journey, and Valeria, you mentioned it, is the ability to change the regulatory framework. Hashtag watch this space in the next 2 weeks. You're going to see the document come out.
Okay.
Okay, that's wonderful to know. Thanks for that, Arif.
Yeah.
Similar questions, perhaps, but I'm going to ask you to also think a little bit broader. CMA, SADC, what is your hopes about how the region would function and start to integrate?
I think that while instant payment solutions are more sort of domestic infrastructure for domestic payments, I think potentially in the future, and we have seen some jurisdiction already starting to sort of integrate their domestic system to facilitate better cross-border payments. Somebody also referenced Nexus earlier in terms of making it easier and not so much on a bilateral basis, but I think potentially from a cross-border perspective, we could use this infrastructure. Of course, it would mean maybe some harmonization around regulations, technical protocols, and things like that. But I think where it makes sense, like within the CMA, SADC, and so forth, I think in the future that's something that can be explored.
Thanks for that, Valerie.
Yeah.
I'm looking at the questions, and again, I'm almost overwhelmed. There's a lot here, but I can probably see quite a number of them already referring to the commercial concern. Is it affordable for the PSPs? Is there a reason for them to participate in it? If it's free. So the whole commercial model that needs to ensure the long-term sustainability of something like this is probably at question now. What is your views on that? Any of you who wants to go first?
I think government needs to become a critical stakeholder. I do agree, and I think I alluded to that inherent tension that exists with programs like this. From our side, we are engaging government in terms of how they come to the party to make it sustainable. I think the Bank of Namibia is subsidizing it now to make sure that the fees remain low and participation remains affordable. But I think we can't do that indefinitely. And I think somebody earlier in one of the earlier panels also spoke about the government and this really being a national imperative just to make it more sustainable. That's probably what I would say at this point.
Yeah.
Then I
I'm
think,
happy to jump in.
yes,
I agree fully that whilst you could have subsidization, we've seen that now in India. They have to rethink how they deal with the commercial model. Right? My take on this, Murat, and it might sound philosophical, is that we've always said, that if you grow the pie, you increase the volumes. We have to move from cash to digital. Let's grow the pie. Right?
Yeah.
There's an opportunity out there. Sure, it's not an easy one. I get it.
Yeah.
But there's an opportunity out there. Let's make it happen.
thank you for that, Arif. Then there's one or two questions that talks about closed loop systems, and the SARB's view also on that, So I think the question is PayShap now the thing that we need to pursue? What other closed loop systems can also be harnessed for a similar red dot purpose? Is there tolerance for that? And then I'm also seeing questions about, I think it's closed loop, but also alternative players, So what if there's a competitive, faster payment system? Is that desirable? Is it not? What is the SARB's views on that?
Yeah, two tough questions. So on closed loops, is there tolerance for it? The short answer is yes, but to a point. In the authorization framework, you're going to see what that point is. Okay? We'd rather dangle a carrot than a stick at this stage and say, for those who have grown, and I know that some of them have grown substantively, we have a closed loop competing NPS that have emerged, and that's perfectly fine for now, right? But there's a tolerance for it to a point. We're going to make that point pretty clear, and then you will come into the open loop, right? We're going to encourage it using a carrot for now. On competing faster payment systems, I've always said that we do have competing faster payment systems. When you look at card, you have whatever we call it these days, original credit, CCPI, and so on. You have the RTGS to some extent, and you've got two faster payment systems. Of course, it's going to consolidate. So competition is great, but we mustn't lose sight of the point of having a national payments utility. Okay? So we will delicately look at these things as we go forward. But competition is great. Yep.
Okay. Thanks for that. We are already over our time. It's amazing how fast time actually goes, and we're aware of the fact that we're now sitting between you and your lunch. But perhaps, any last thought that was triggered in our discussion today that needs to be mentioned? Let's just have a closing comment or two of each of you.
I'm going to stick to my core message. We have the opportunity to contribute from a payment system perspective to the GDP of this country.
Thanks, Arif. Valeria.
What he said, except for Namibia.
Find replace.
Yes.
Anna.
So for me, it would be about inclusivity and working together as an industry to achieve these goals. That would be most important.
Thank you very much. Thank you to my panelists, and thank you to all of you.